Hi, I'm James, and I'm here with Sean today to talk about doctor loans. Sean, do you mind if we just jump right into it?
No, James, this is an exciting new product, so we'd love to.
Great, great. So, first question that comes to mind is just really basic. Why do doctor loans even exist? Are physicians just getting treated differently? I mean, what is the basis for these, industry-specific loans?
Yeah, that's a great question, James. Doctors have a unique financial profile early on. Many of them carry student debt and they're in residency, so they're not making much as far as income. The projected income, however, is going to be very high. And as they go through years of work, that is very evident. So the lenders feel comfortable about making these loans.
That makes total sense. You're going to finish making much more money than you start off with as a doctor. So
Absolutely.
that tracks.
Absolutely.
Okay,
Yep.
cool. So a lot of the highlights of these doctor loans include things that are primarily based on not having to have a very large down payment, and I think in some
Right.
cases no down payment at all. So can you touch on that? Is that really true that you don't need any down payment?
Absolutely. Absolutely. This program allows up to 100% financing, really putting nothing down by the medical student or the person in residency, or if he's working, he can do zero down as well. So you can leverage, a home today with zero down. In some cases, you may have to put 5%, but that's a conversation we would have. But yes, zero down is very possible. And that's the highlight of this loan, in fact.
Yeah, that makes total sense. You may not have had that much of an opportunity to save if you're a young doctor and you've gone through school and you have all the debts and stuff like that. So, yeah, that sounds like a
Absolutely.
great plan for a young doctor.
Absolutely.
So, another highlight, as I understand it, is that student loan debt may not be calculated into a qualifying ratios. So, can you tell me a little bit more about that?
Yeah, absolutely. Unlike conventional or FHA lending, where you have to consider a payment, even if it's in forbearance or it's deferred, with student loan debt on this program with a doctor, it is not counted against them in the debt to income. So it allows them to qualify for a lot more. This is a big benefit to those because the doctors generally, again, are carrying debt early on in their careers. So, and a lot of them want a house. This is much easier to qualify than conventional or FHA lending, where you do have to consider that debt.
That makes total sense. Some doctors just end up with heaps of debt upon graduation, and if there's no, other way for them to go for financing, they could just end up with no house. So, sounds like a great
Absolutely.
opportunity.
Absolutely.
So I guess my next question would be, say I'm a young doctor and I'm just starting out, but I have a job offer in the future that
Mhm.
I'm guaranteed to make X amount of money, but I'm not quite started yet. Is it true that maybe I could get qualified based on future income for this loan type?
Absolutely. This is another great aspect of this loan program. It allows doctors to actually close on a loan 150 days before they start their permanent employment. Usually they'll get an offer letter and we'll look at that and submit it to underwriting. But unlike conventional, again, who does allow early closings when they haven't started their employment, I think there's a 60-day window. For doctors, this program allows up to 150 days. And part of that is just the lender feeling comfortable their income will be pretty high once they start, if that makes sense.
That makes total sense. That's almost three times more lenient than conventional as far as the time frame that it allows. So that's huge.
Absolutely.
That allows you to to get qualified and really find the right house too. So that's perfect.
Absolutely.
So let's talk about something maybe on the other end of the spectrum. Sometimes these loans with 100% financing can come a little bit more with a little bit more expenses involved. So would you consider this, a more expensive loan than a regular mortgage, or how does it fall on the full spectrum?
Well, James, anytime you put zero down, no matter what type of loan it is, probably going to come with higher cost. And mostly the costs are in the form of a higher interest rate. If you put zero down, obviously, more risk to the lender with more risk, there's a higher rate. So that's really the obvious uh, place you see that costs go up is the interest rate. Since you're borrowing a higher loan amount at zero down as well, yes, some of the closing costs are based on the loan amount. Therefore, your costs are higher. But it's not that much higher than I would say a 5% down loan. Um, Again, you're leveraging a great asset for zero down. And the expectation is that asset will go up over time. And then again, you can refinance this loan later on as you get more equity. Putting zero down, there is no mortgage insurance, unlike conventional, where you have to put 20% down, and FHA, where it's required no matter what.
That's huge. Yeah, and it makes total sense too. It sounds like there's maybe more benefits to this than there are drawbacks. It's just good for
Yeah,
everyone to consider the full picture.
absolutely.
So I guess the next question that comes up to my mind is, who is this best for? Like, what we say doctors broadly, but can we narrow that down to, more specific groups?
Oh, yes, James, absolutely. Doctors who are still in residency can really take advantage of this program. Obviously, you want to be in that 150-day window when you're going to start employment. That's kind of the target audience, if you want to say. Also, doctors who have already started who are carrying a lot of student loan debt. This is really one of the best ways to qualify out there is not to have that debt count against you. Therefore, it's much easier to qualify and get this home. So, obviously, those are the two biggest groups here. And I think the focus of this loan is squarely on them.
That makes total sense. So it sounds like people that are younger doctors just starting out their practices and or people that are carrying lots of student loan debt that really kind of need a way
Yes.
around that to qualify.
Yes.
Okay.
Yes. This loan program was really geared towards those two factors. I think increasing income and student loan debt, as they see a lot of that.
That makes total sense. And those are really the two main roadblocks for doctors getting qualified anyway. So that's kind of hitting the nail on the head.
Absolutely.
Cool.
Excited to have this product, by the way.
So I guess the next question, and we may have touched on it briefly earlier, but I think it's important for a program like this, is can I buy this? Can I buy my house using this doctor loan and then refinance later into something different?
Yes, absolutely. Again, you want to have a little bit of equity, so there's going to be a time frame you want to wait before you refinance, maybe a year or two. But again, typically credit scores go up after you get a mortgage, so it's easier to refinance in most cases for these individuals who have doctor's loans. And you will get a better rate once you come out of that 100% financing rate initially. So, and also if you pay your loan down faster, that helps as well. You have more equity, therefore the lender can get you a better rate. There's less risk if you pay it down faster.
That makes sense. So basically, build a better equity position, gain a little bit more than 0%, of course, because you're financing
Yep,
the whole loan, and then go from there and try to refinance at that point.
absolutely.
Cool.
Yep,
Yeah, that makes sense. And so the last, main question I had for you is, what is the biggest misconception doctors have about buying a home?
sure. Two biggest things are student loan debt, obviously, and they haven't been in their practice that long, or they're still in residency.
And this loan seems tailored just to try to get around those hurdles. You can use
Absolutely.
projected income. You can put 0% down. You don't count the student loan debt towards the qualifying ratios. Seems tailor made for doctors.
Yes, it is. And we're excited to offer it here at Reliant Mortgage Solutions.